All right. Good morning, traders. Welcome to Price Plan Profit. I'm Melissa, and today, as we do every Saturday, good morning, Bob. We are going to go through the overall market, what happened last week, what I am anticipating for this week. Remember, this is just an anticipation, but I am a technical trader. I trade price action, not news, not whatever's going on in the outside world. These candles are the only thing that matters to me. So I'm going to just jump right in here after I go over the uh, ES futures chart, which is how I base the price action anticipation into this upcoming week. After I do that, I will go over my list of stocks that I'm watching for potential swing trades and share with you my buy zone and sell zones. And then, if you have any questions, you can put them in the chat and any chart request, any of the names that I don't go over, maybe that you're looking at to swing trade next week, I will take some chart requests so you can put those in the chat as well. Be sure if you're requesting a chart, though, that you let me know the amount of time you like to swing trade. You could be a trader that likes to swing trade for 2 to 5 days, or you could be a trader that likes to swing trade for 2 to 5 months. There's a big difference as far as what time frame chart I'm going to look for buy and sell zones on based on the amount of time that you would like to be in the trade. So if you're requesting a chart, be sure and put in the chat the amount of time you'd like to be in. Yeah, thanks, Mike. I'm going to share my screen now. And by the way, Mike, I tried those videos that you sent. And basically, what it comes down to is I'm going to have to start streaming using OBS. I have that software loaded, but I'm not real good technical wise. And my husband just got in town yesterday. So I didn't have time, or it was Thursday night, sorry. I didn't have time to have him help me set up to stream from there. So I know that the camera here is in the way of the bottom right hand side of my screen. And so I next week will start streaming using an encoder so that I can move the camera out of the way. All right. So apologies in advance, guys, for that. All right. So here we have the ES futures chart on the screen. I like to start from a top down approach. That means I'm looking first at this weekly chart. For the last couple of weeks, I've had this gray zone up here, and I'm labeling it selling pressure. The reason I'm labeling this selling pressure is because of the topping wicks that you see on the chart. There is not an inside and down candlestick structure on this weekly chart, but these topping wicks tell us that sellers are overpowering buyers in this area. And for the last 3 weeks, this gray zone has worked very well as a indication that indeed there is still selling pressure up at 68.78 by the all-time high 69.53. So keep an eye on that. Now, last week's close, we closed last week, not the week we just finished, but the prior week. We closed at 67.65. This week, we closed at 67.65.25. That means that this week was an inside week by a quarter. Now, why is that important? Because The week that we're going into on Monday could give us an inside and down candlestick structure if price keeps dropping in this buy zone, or an inside and up candlestick structure. So these are in very important levels for next week for me. And I want you to be sure and be aware of them. Below 67.65. Now, these are weekly candles, so that means if Monday it goes below, that isn't an inside and down. It's anticipating an inside and down, but it technically is not an inside and down until we meet again next Saturday. And I can tell you how this week's candle closed. So below that 67.65 is an inside and down, and above 67.88 inside and up. So make sure this week you know those two important levels. And then on Friday, go back and look at how we closed. Did we close up in here or did we close down in here? Now, this week, we made a higher low inside of this buy zone. That is bullish signal that buyers are still buying here, and they're actually buying and keeping price up above the low from the previous week, which was 66.55 and a half, because this week our low was higher than that. All right. Now let's talk about the daily chart and get an idea of what's going on this daily chart. We had a lot of consolidation back here the mid October. Just, I remember trading this and it was just blah, yuck. So much consolidation in this area. I could have made this buy zone. I could have went all the way up to here. I could have went all the way up to here. If you notice, we have inside and up, we have inside and up, but that would make this buy zone so very wide. And I just didn't want to have a zone on here that is 250 points wide. So what I did is just went here and marked these levels that on these lows, both of these are a Friday, by the way, on these lows, where was price in relationship to this choppy mess? Where did price turn around? That level is 6684.25. If you're in the trendy room at Simpler Trading with me, then you know that this yellow line over here is what we call a weekly edge, and lower weekly edges are buy zones. If I turn on the cloud for this zone or this line, it will create a zone. It won't show you what next week's is going to look like because this is still in the future, but you see this week's weekly zone, weekly buy zone right there. On weekly edges, these are trades that we intend to be in from Monday through Friday. These represent last week's trading range, buy zone here, sell zone here. And look how well it worked on Friday, the prior Friday. Price came down, whipped down into the future weekly edge. We took off from there. And then on the 12th of November, we came up into this sell zone. This was an opportunity to go short. And on Friday, we pulled back into the weekly buy zone. So price went from zone to zone and then back again all last week. And the reason why I'm talking about that is so that we can watch the weekly edges for this week on the ES. I want an alert here at this lower weekly edge. So I'm just going to place an alert, and in the note, I'm going to put lower weekly edge. All right, that's a buy the dip opportunity on a pullback there. Now, I also want an alert on the upper weekly edge because that is an opportunity to go short. So I have now the two major areas for next week to either buy a dip or sell a rip. All right. All right. On the daily chart again, this is what we got. You have this buy zone down all the way down here at basically 6,600. That's where the lower monthly edge is. This zone has been tested. This zone was created back the beginning mid-September. So, but it has been tested and not just once. It was tested here on the 10th of October, it was tested on the 14th, and it was tested on the 17th. All right, that means that price doesn't necessarily have to come back here. These zones represent blocks of buy orders, right? And the market makers will often, if they need price down here, to buy more, they will push price down here so that their orders can get filled. They can't fill a, several $1 million order all at one time. They can only fill so many orders at a time. So they got to drive price back there until their orders get filled. So this zone has been tested 3 times since it was created back here in September, meaning it's very possible that there aren't any more buy blocks of orders sitting down here that big money needs price down here. All right. All right. And again, high or low, important. All right. Let's look at the 4-hour chart. Looks like I deleted my drawings off the 4-hour. All right, let's delete them completely off of here and let's draw a 4-hour chart together. All right. So for buy zones, what I'm doing is I'm taking where price is currently at. I'm looking down and to the left to find that buy zone. So if I look down and to the left, looking for inside and up candlestick structure. I have inside and up candlestick structure right here, and that is that area last Thursday. No, sorry, la looks like the 7th, last Friday, Friday before, and then this Friday that price came down into, that's that 4-hour zone right there. I'm just going to use this week's lower weekly edge because I already have an alert there as the bottom of that zone because that's my buy the dip opportunity. And then I'm going to use all the way down to this low because it incorporates my monthly edge, lower monthly edge. If I turn the cloud on so that you can see where that would be a zone, magic, see it? So that's the area that I'm going to mark as the green zone right there. And that's incorporating a lower weekly edge and a lower Monday, monthly edge and as well as candlestick structure. All right, so that's going to be my buy zone there on the 4-hour chart for ES. Now, to find the sell zone, I need to do the same thing, but I want to look up and to the left. And I want to look for this candlestick structure. Now, I used the lower weekly edge down here right? And a 4-hour chart is one that I'm looking to be in a trade for a week. So this makes sense to use my weekly and monthly edge again. But I want to look further to the left because do you see you have the upper monthly edge here? That's a part of this inside and down candlestick structure. Then you have another zone right after it, right? Or right it previous to it, you have inside and down. I'm going all the way up to the all-time high. And again, if I turn on the cloud on that upper monthly edge, you can see that it will line up. You see it? So both my buy and my sell zone are completely in line with the lower weekly and monthly edge and the upper weekly and monthly edge. All right. Let me take those clouds off because it just makes my chart too busy for me. All right. So now I have my major buy and sell zones for next week on this 4-hour chart because, like I said, if I'm looking to be in a trade, getting in it, say, on a Monday and plan to be out of it on a Friday, this is the time frame chart I go to, the 4-hour. All right. So now I have my major buy zone and sell zone on this 4-hour chart. Of course, you have a candlestick structure right in here. You had inside and down candlestick structure. Look, we popped just above there yesterday, but we did sell off into the close yesterday. Price could not get above here and hold above here. So that's very important. And if I run my Fibonacci's, which I absolutely love to use on for my trading, you can see that this 618 here, we got above it last week on Monday and we came up within just points of the upper monthly edge here on Wednesday, but then we just started selling off into Thursday and then overnight Friday or yeah, early Friday morning and then we got that same pop that we did last Friday. This channel right in here for next week is going to be big. Basically 6,800 to 6,840 price. Bulls need to get price above there, but even when they do that, you know there is immediate resistance there. All right. All right. So now that I have an idea of what next week might look like, let me tell you what I am expecting just based on these charts. Zone, buy zone, selling pressure, they're close, right? On a weekly chart, 150 points is close. So kind of points to choppy conditions on the weekly. On the daily, here's your immediate support. Here's your immediate resistance. Those are close as well. So, again, choppy conditions. 4-hour, same thing. Same thing, right? Close. The zones are close together. So we could get another week of you might get some volatility. We probably will. But I am going to trade these weekly edges for that volatility and these buy zones and sell zones for that volatility. Keep an open mind to play both sides of the market, whether that's short or long when you're trading intraday because that has paid off very well last week. And they're really this week, that we just had, right, mimicked the prior week. And so if this upcoming week mimics those 2 weeks, then I want to be prepared and be setting on the right side of the trades each time. What I don't want to do is get in a trade down here where I go long. And then when we get up here to this upper weekly edge, rather than taking my profits, I'm like, nope, this is a time we're going to bust through, make new all time highs, and all of that. We might do that. But to be a good manager of my money, I need to honor and value the buy and sell zone. So if I'm long from here and price makes it to here, and when I set this plan in motion, I was cool with capturing 150 points to the upside. I don't want to allow my euphoric emotions up here to keep me from taking profits and letting a winner turn into a loser or giving up too much of the gains. All right. All right. So, as far as this week goes, and what I noticed looking at koifin.com was there is still signs of areas of the market that were weaker earlier in the year are climbing up that ladder on the different time frames showing relative strength. So everybody's been gung ho to trade those meme type stock names. Everybody's been gung ho to trade semiconductors and the tech sector and all of your Mag 7s and all of that. And it's worked out very well for us from April until October. But starting in October, there were signs that some of the sectors that were down at the bottom started moving up, such as healthcare and energy, believe it or not, oil services, things like that. That to me is just a sign that, hey, I need to have some of those names on my watch list as well as the tech names that are doing well. I will say NVIDIA reports on Wednesday. Any semiconductor type of stock that you are currently in a position, just be okay with your risk and know that it can be affected positively or negatively by NVIDIA's earnings. I do not have a semiconductor name on my watch list for this week. Now, depending on what NVIDIA does, I might have it on there after they report earnings, but I personally don't trade earnings. I trade from a cash account, and with earnings trade, the implied volatility is so high leading up to earnings that buying straight up calls or puts, even if the price moves in your favor, if there's a vol crush, the premium just goes pew down, right? Even if the price is going up, the volatility can go down, which reduces the option premium price. But if you're a trader of spreads and you can take advantage of that and the vol crush, then go for it. But I prefer just to trade straight up calls and puts. So I really rarely ever trade an earnings with straight up calls and puts. So NVIDIA is off my list for this week until after they report, as is all the semiconductor names that were on my watch list last week. All right, guys. All right. And as a reminder, if you have any questions or chart requests, put them in the chat now. At the end of this, I'm going to answer those questions and do some charts with names that maybe I don't cover that you're interested in where the buy and sell zones are at. So let's get started with my list, starting here with Apple. Look, tech was pretty volatile this week. You had some up, you had some down, you had some in between. But one thing that's for sure is that Apple remained very strong. Yeah, it had some pullback. It obviously with this topping wick, but overall it showed remarkable, incredible relative strength. So Apple is on my watch list here. And the buy zone, now I just made this thing gray because it wasn't a very powerful move. The all time high, of course, is going to be your resistance. If we get a continuation candle this upcoming week and we close up in here, maybe we take out the all time high and we're looking good up in here, I'll change this to a green zone, but for now it's gray for me. But note 269 is the top of that zone. All right. On the daily chart for Apple, notice you have you had days, not last week, but the week before of consolidation. Then you got that big, nice move up on the 11th and then a couple of days to the downside. And really, yesterday was a day to the downside because we closed lower than the previous day. So that's 3 days down on Apple. Here's my lower weekly edge. If I was just trading edge to edge on Apple, this would be my buy and this would be my sell for next week. So it's lining up not just on the daily, but also there on the weekly. This zone right here is going to give a risk of about $3.56. And the reward is up here at this upper weekly edge. Let me adjust this down a little. About $6 up above, and then of course the high there. So risk to reward is good trading this zone on Apple. It's very important. Anytime you put on a trade, whatever amount you pay for that trade, make sure it's an amount you're comfortable with going to zero. It's not going to wreck your emotions and it's not going to wreck your account. I do not make a habit out of letting trades go to zero. I just don't. I do not make a habit out of taking a max loss. I've had three, maybe four trades the entire year that has done that. And what usually is the case is there's a big, huge pullback, and my option premium at my stop is less than $100. And at that point, that means I'm leaving less than $100 at risk. And when I took the trade, I was okay with the amount going to zero. And I'm just not going to close it out for less than $100. So, that happens sometimes, but I'm saying that because if we take a trade or if I take a trade on Apple here at the 269, 270 level or wait for this lower weekly edge at 268 and a half, and my stop is here and I go to bed, let's say I get this order on Monday. And then I go to bed Monday night and the market is all the way down to some of those lower buy zones. When I wake up on Tuesday, Apple could find itself all the way down here. Well, you know what's going to be, you know what this option is going to do if I bought it up here near 268 by 270 and it's all the way down at 261, it is going to be yucky. Okay, it's not going to be worth jack. So that's why I mentioned that about risk and allocation amount. Make sure if you're going to bed at night, your risking amount that is, if you wake up and you find a price all the way down here, this isn't going to wreck you emotionally and it's not going to wreck your account. All right. All right. Then on a 4-hour chart, just to give you an idea, it's not going to change much. It's just not. A edge to edge trade here on Apple is looking good. Um, for me for next week, or using a higher time frame zone and going out until December and then trading it up into the upper weekly edge as a first target. If we take out all-time high, then I would draw extension targets to get more targets to the upside. All right. Up next is Abbott. Now, Abbott is a healthcare name that is that healthcare sector has been absolutely one of the strongest sectors as of late. Abbott just got above the weekly cloud here this past week. It had a wonderful move to the upside. Here is an inside and down on the weekly. This is a previous inside and down zone here on the weekly. Abbott has room to run to 134. But for me, and you can see that's going to line up again on the daily chart. It's coming into a resistance here because it took such a nosedive. It is below the daily 200 right here. This is resistance. Anything below a daily 200, I usually wouldn't even look at. The reason why I'm looking at it is because we keep making higher inside and up candlestick structures, and it has room to come into these resistance levels, and healthcare is so strong right now. The actual trade that I am most interested in is what we call the ACDC trade in the trendy room. And the way this trade works is as price comes up through these down orange arrows, that is a bullish sign that what was in a downtrend is on its way into an uptrend. And so this is a trigger long. When price is coming from below and pushes up through here, this is a trigger long. The important thing is these green arrows above are our first targets because this is resistance now from a move through the orange arrows. Price above that first target, that resistance area, you're looking for an upper monthly edge to be your target. Let me just see. I think I can't see the or purple line very well. There it is. Yeah. So right at this zone, that's my target. So on Abbott, if I trade off of this ACDC setup, a stop would be a candle close on this 4-hour chart below these decelerator arrows right there. My entry, I would prefer to see a pullback before going long. So my entry is going to be back down in here closer to this monthly edge mid and Monday's lower daily edge, this orange line. So what I plan to do is to watch Abbott on my day trading focus list on Monday, knowing that the lower ME or daily edge DE is my trigger, right? To start a swing trade here. My target is up here 134 to 136. I do have resistance here at 131.16. Of course, these accelerator arrows are also resistance, but I put the resistance up higher because we've already hit those accelerator arrows a couple of times. I used a topping wick over here. So on this trade, that would be my first target. Ultimate target is right up here, 134 to 136. But again, I need a pullback. I will watch it on Monday for a potential pullback into this buy zone for a swing trade. All right. AEP, I went ahead and left on my watch list. I didn't get this trade because I was in another trade of the same sector, but AEP is strong. It is looking great from a trend perspective. You have a lower weekly edge down here at 120.78 for AEP, but I would really, you can see we are 1, 2, 3 days down. I am liking this area in here. So somewhere around 119 for a buy to play it back up to basically 121 and a half, and then 123.31 the high up there. So this is, I have an alert for AEP on a pullback. I'm going to put that slightly above. This would be a golden profit area play. So a pullback from down here up to the high. It pulls back halfway by that golden Fibonacci area. That's a risk of about $1 there. And reward is about $2.50. And then obviously 4.5 up here. All right. All right, let's take a look at Amazon. Amazon was a trade I actually started and had plans to add into. I didn't add into it because my trading partner took a trade as well. And just so that no one would get over allocated in one name if they followed my trade and John's trade, I didn't add to this trade. And that's okay. I was very small risk, 200 and something dollars on the trade. It expires on Friday. Hey, if it moves up and starts, just ripping to the upside, if XLY can get a rip to the upside. This is still my target up here for that trade. I did, though, want to mention that just trading this edge to edge next week is looks good to me. I would turn my cloud on the weekly edges on Monday and get you a zone here to trade off of. My plan is with this one contract that I have next week, playing Amazon out of the PMZ to be out of that trade by Friday. All right. So that's my idea for Amazon is I will day trade it using the PMZ to get myself out of the one contract that I started last week. All right. But again, this to me looks like my playing field for PMZ trades next week. I'm just going to use the lower weekly edge, turn the cloud on. That's going to give me a zone, and that's going to be my buy zone. And this is going to be my sell zone. All right. All right, Boston Scientific. This is another healthcare option besides Abbott. Uh, Boston Scientific, you got two inside weeks, and then last week was an up week. That gives me this buy zone on the weekly right here at 99.34 to 97.45. So I want to look at the daily and see if I have confluence there. And I do, and a lower weekly edge there. So I'm liking that. Now, on the daily chart, you got a rising 21. You have it's pretty flat, 50 and 200. Price got above that 200 SMA and you had two continuation candles. That means on a pullback, this very well could be your support. That daily 200 could be support. And notice the daily trendy cloud is lining up right there. So there is a possibility that if healthcare remains very strong next week, that Boston Scientific does not pull back to the lower weekly edge. It could find support here near 102. All right. The cloud right at 102. Let's look at it on a 4 hour. And I've got a zone here, inside and up and inside and up there. So this would be a place that if I wanted to trade it for next week, I would be looking. This is a lower weekly edge here. So starting the trade right around 101, adding to it at 99.5, that means I would be buying the 100 calls. This would be my stop below, and then playing it back to the upside. This is my ultimate target up here near 105. So that's about, even from the top, that's about $4 of reward, $2.30, a little less, but 230 of or sorry, a little more, 233 if I want to be exact of risk, and then $3.85 reward. So that's what that trade looks like on the 4 hour chart. And this is the one that I am going to focus on. But if I give myself all the way out to December, that means that I am going to be committed to daily candle closes. All right. All right. Let's talk about calm. Calm is in the gutter on the higher time frames, really, honestly. Not in the gutter. I mean, it's still neutral for the year and the month. But the reason why I say that is we've had a huge pullback, huge, big pullback from 117 to $89 here. And the daily, I mean, you got this immediate resistance, these key EMAs. You got an upper monthly edge up here at about 94.5. This name made my list because it's an ACDC play. And again, ACDC play. Price came from the bottom, pushed through these decelerator arrows. And I mean, it came up to the accelerator arrows, which is resistance, and it pulled back. I want to see this zone right here. And I need to move this line down just a little to get a more accurate um, risk because I have a lower weekly edge there. Okay. So it's probably going to be the cloud on that. It's going to be somewhere like that. So about $1.70 there. My upper weekly edge is up here near 92. So about a 1-for-1 risk to reward to that first target. This would be a second target. Calm isn't my favorite of the ACDC trades I have on my watch list, but it is one and people like to trade this name. So I went ahead and decided to talk about it, but it's not my favorite. The important thing is you're okay with the risk here, trading this edge to edge for first target, and then the upper monthly edge, which is your ultimate target on an ACDC trade, is up here. All right. So that is calm. Now let's talk about Cisco. Cisco is looking great. You might think it's at all time highs, but it's not. It has this sell zone back from the year 2000, believe it or not. But it's right at it, and that means, I wouldn't play this unless I get a pullback. So, on a weekly chart, that pullback would be to about $72. On the daily chart, I can play this bullish, golden profit area, and my buy zone would be at about 75 and a half. On a 4-hour chart, it's gonna be the same. Okay. So if I get to this area right in here of about $1 and about $3. So I've got a good reward here. And this is a trade that I really would like to play if, if and only if I get a pullback to 75, $76 right in here, okay? All right. I like Cisco, though. I like it for a play to the upside. Gold. Gold has been so strong since August. I mean, look at that ripper, right? Now, we had an inside week and then a down week. Price stayed right at that 38.2 on this weekly, measuring this range right here. And last week, we got a bounce up into this sell zone on the weekly, and we pulled back. We created that topping wick, showing that there was definitely selling pressure there. On the daily chart, we actually created a daily sell zone here at 382.87 by 388.89. Now, from a weekly edge to a weekly edge play, gold GLD is a buy here at 372.86. For a buy zone trade, inside and up. We came back, we tested it, got going. Could we be coming back here? I don't know. Were the orders of buy blocks filled on these tests? I don't know. So there's two ways I intend to play gold next week. The first way is just playing edge to edge, turning on the cloud on these edges and playing it from 372 back up to 386. And the cloud would be my risk on the trade, okay? Or 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 maybe and, right? If this trade doesn't work out or even if it works out and we get a pullback back to this daily buy zone, I would be a buyer down here as well. What I'm not going to do is hold on to a trade from here all the way down to there because that makes my risk too much, too great. Too great, compared to the reward. All right. So, two ways I intend to play gold next week. One is buying the dip at the lower weekly edge, playing it up to the upper weekly edge. And the other way is buying a dip to this buy zone and playing it back up to what was support is now resistance. So, up to there. You got a monthly edge mid right there, and then this zone. All right. Oops. And that's my plan for GLD next week. Let's talk about Google. Google's been outperforming as far as tech goes. We were just stuck in this range forever. And we actually opened up all the way down here on Friday. Came very close to my buy zone that I've been watching. I left Google on here because of a weekly edge to weekly edge possibility. So this is very similar to gold as far as Google goes, right? I'm a buyer here or here. Okay. My targets are the edges above. by the all-time high. Okay, so I'm a buyer from here with the cloud is what I will use as my zone, or from here, either one. But I like Google back to the upside. I just need some pullback. Halliburton, this is an oil services name. I told you I am starting to pay attention there on some of these oil services. Actually, had a good trade in Schlumberger last week that I talked about last Saturday. It hit my first target, so I got out because I only had one contract, but I know some people in the trendy room that followed me on that might have multiple contracts, and there are still uh, targets above on Schlumberger. I think, yeah, I still have that chart in my list, so we'll go over it. But Halliburton, same sort of area, but Halliburton has not taken off. So I would be looking to play Halliburton from this zone right here where it's the bottom of this consolidating area. So that's only a risk of about 50, what is that, 63 cents there, about 63 cents of risk, and the target is right up here at 28.43. So that's about $1.30 or so of reward, and then this zone being the ultimate target. All right. That's Halliburton. Hershey was another possible ACDC play. Hershey has some resistance to get through, but it also has a pretty defined risk to reward here. So I would be a buyer anywhere from 177.58 to 173.39, playing this as an ACDC. If I get this pull back here to 177.58, that would be the trigger long for me. And then I'm taking profits, trimming my position at these targets above. The upper monthly edge is in this zone up here at 190 by 194. So this is on my list because of an ACDC play. Yeah, that's what I'm seeing on Hershey. J&J, of course, another uh, healthcare name, and this thing's looking great. I am an equity holder of J&J, so just so you know. But on the weekly chart, all-time high. That's your immediate resistance there. You got a trendy buy arrow here on this week's weekly candle. That is great. If you can get a pullback to where we opened or that weekly cloud right there, that would be a good pullback buy on the weekly chart. As far as the daily chart goes, it's extended from the 9 EMA here. That's all the way down here at 192. Now, price got above this upper monthly edge, so now we treat it as support. So I would be looking for support on the daily chart anywhere from 193 to 192. But if price gets down below there, I'm looking for this buy zone in here on J&J. So my plan would be to trade this off of this 4-hour zone where we had inside and up candlestick structure. I would be playing it back up to the upper weekly edge and this new high. So that would be a risk of about $1, 13. And then the reward would be 2.5+ dollars, and then of course above there, $4.5. All right, that's J&J. Kinder Morgan here. Yes. Let's see. Sorry. There you go. All right. Inside and up right here. I like this right in here, but I'm also open to playing this as an AC/DC trade, even if we don't get a pullback. It's at this triple stack of edges. That's why I wanted a pullback play just in case we were to get a pullback to 26.85 here. This area is resistance, obviously, right? Three edges in a row. You got this big old imbalance candle there at 28, but your target is 28.43 by 29.43. An AC/DC play is what I like for this name. So being a buyer here, playing it up to these targets. All right. We just pushed above those decelerator arrows and we consolidated right at them. And then on Friday, we got a nice push. You're also setting up in a nice squeeze. So these are the targets above, but I would like to see a little bit of a pullback again, I'll mention before going long, and I would like to see that pull back about 40 cents there. So I would have a risk of approximately 63 cents. And my first reward is going to be about a 1 for 1, and then it gets better at these upper targets. This is a trade playing an AC/DC, but it's very, very affordable and there's good liquidity. I would be going all the way out to December. Okay. KO, this is really the only name as far as the consumer staples that I would be interested in trading because of the consumer staples, which tends to be a very defensive area of the market. If the market goes risk off, this is the best looking one as far as the heavily weighted names go. So it's not that I'm actively looking for a trade on KO. The reason I want this on my watch list is that if the market really starts feeling risk off, I want to have a name that I can look at for a play defensively. All right. Merck, I missed this trade and golly, it played out perfectly. But Merck still has room to run, and healthcare is a hot sector right now for a longer term type trade. And I mean like months. This would be the buy zone on Merck, and this would be the immediate target. And then, of course, I would be targeting the yearly edges up here. This I'm talking about for a leap type trade from the daily chart. Merck is extended from its 9 EMA. Merck has a nice zone right here on the daily chart, but I also like it for an edge to edge play here on the weekly. And that's the lower weekly edge back up to the upper weekly edge there. That would look like, or let me show you what that would look like on a 4 hour chart. Look at this beautiful imbalance right in here. And then you have inside and up, and basically it goes from right there. So that's a risk of about $2, a little less than $2. If I get a pullback on Merck to here, I want to be a buyer. And then as far as upside targets go, I'm going to use the trendy edges first and foremost, right? So there's your edge and there's your edge right there. So from 87.08, my stop would be 85.24. Let's just say that it's $2 of risk. It's less than that. Then you got $3 to the first target for a reward and 6 or 7 to the second target. So this is the time frame chart that I like for Merck on a pullback buy. Now I have several healthcare names on this list: Abbott, Boston Scientific, J&J, and Merck. Let me talk about this for 1 second. Please don't get so overly allocated in one area of the market. If I take a trade on the trade sets up, let's say on J&J, and I'm in J&J, and then a trade sets up on Abbott and Merck and Boston Scientific or all of them at the same time, I'm not entering every trade. 1, yes. 2, maybe. 3, no. 4, definitely not. Okay? That's something I had to learn the hard way. I don't want you to have to learn it the hard way if you haven't already experienced being too heavily weighted in one area of the market. Newmont Mining is the best looking metals and mining stock out there right now. uh, Metals and mining was leading and it was doing so well for so long. It has experienced a pullback, so I put NEM Newmont on my watch list because I like the chart the best. On the daily, we're right here at a weekly edge, just above the daily cloud. The 21 and the 50 are support down here below. I can do this as an edge to edge trade. My risk to reward would be approximately $2 of risk, and the reward is somewhere around 6 or 7. That's a good risk to reward, right? So Newmont is on my list for a potential edge to edge trade. All right. O'Reilly is on my list because it was brought up in the trendy room for an ACDC play. It has not gotten above these decelerator arrows yet. And if you notice, I have an alert up here above 100. Why? Well, because this is a bearish golden profit area. We've come up and we've tested it and it has rejected. The reason why I have my alert above $100 is because that would be a push above these decelerator arrows and it would be a higher high inside of this bearish GP. That gives me confidence in taking the trade on momentum, on strength, making higher highs. And then my first target is this 618 and these accelerator arrows. As far as the stop goes, it's going to be right down here. So that would be a risk of about $1.87, and the reward would be right at the same, right? Because this is going to be my target area. So that's a 1 for 1. Then if we get above these accelerator arrows, my next target is going to be up here near 104, 105. And then the upper monthly edge is very hard to see if I have a red zone in it, but it's at about 106 and a half. That's my next target. And then, of course, the top of that sell zone will be the next target. So the risk to reward is there. Initially, it's only a 1 for 1. I would definitely take the profits here, move a stop to break even, and then stay in it as long as that break even stop isn't hit up to this target zone here. All right. Let's see. Phillips 66, another oil name. Again, I will not over allocate in these oil names. From a weekly time frame perspective, we're at resistance here on Phillips 66. Your buy zone's back here near 129. On a daily time frame perspective, you're right at resistance. If we get a pullback into the lower weekly edge that is setting up with some nice inside and up candlestick structure, I would be willing to play this back to upper weekly edge. So I imagine the risk on this is going to be about $1. Then the reward is going to be about 3 to 5. All right. So this would be the buy the dip, trim, trim. But you can see I would need a pullback in Phillips 66 to get that buy. Here's the Schlumberger chart that I talked about. I went ahead and took my profits here like a good girl in the bearish golden profit area, but the next targets, I still like this chart, FYI. But the next targets above are 37.5 by 37.83, then 38.08 by 38.65, and finally all the way up here near $40. All right. So I still like Schlumberger, but I only had one contract and I took my profits right here at this upper weekly edge last week. I bought down here, I exited here. This was an edge to edge trade. Okay. All right. SoFi. So SoFi made my list because it was showing strength last week, right? And it played out nicely for an ACDC play, but now it has went south on us. So look at this play on Friday. If you had bought the future weekly edge, played out to upper weekly edge and upper monthly edge. It came back down to lower weekly edge, and now it's camped out at the decelerator arrows. This ACDC bull has already played out. You can play it more than once. Okay, it can play out more than once, obviously. So, if I were wanting to take a trade here on SoFi, what I would do would be to either use the decelerator arrows as a buying opportunity or wait for lower weekly edge by last week's lower weekly edge. That's going to give you a risk if you take this early entry or this one. It's going to give you a risk of about $1.50. Okay. As far as rewards go, we would treat it like an ACDC play again, which is going to be about $1.50 to that first target. And then obviously it would be a better reward up here at the upper monthly edge by upper weekly edge. So that would be a reward of approximately $4 up there. All right. Claudia, you bought shares at 27.08. I like that. Yeah, that's nice. Way to go. All right, let's look at Steel Dynamics, another metals and mining type play. This is an ACDC bull play, but it's pretty choppy right in there. We got back up above the daily cloud. You're at immediate resistance. Some targets above are here, right? Lower edge to upper edge looks good. I like using this as a zone in here that is an upper yearly edge once price is above it, we treat it as support. And you can see on these pullbacks, once price got up above it on these pullbacks, it did act as support. Then, of course, I got a lower weekly edge right there. That gives me a zone to trade from that's about $1.50 wide there. And my first reward is all the way up here, which is great. But I will say this, you if price pulls back to here, the top of the cloud is going to be resistance again. You see how it acts as resistance until price finally pushed above it? Well, it would be resistance again. And I don't know exactly where that's going to be, but if I just use where it's at right now, that would give you a reward of about $3. And again, that's better than the risk. So I would be fine still with taking a pullback here. All right. That would be my trade on Steel Dynamics, and a stop would be a daily candle close below. Warner Brothers continues to just outperform. I mean, it's looking great, but notice there's a long way for this thing to go because at one time, Warner Brothers was trading at $78. I know, crazy. But if you look at this weekly chart, good to see that trade worked out perfect. I never got my dip buy. But if you look at this weekly chart here, you have inside and up. This is the weekly buy zone on Warner Brothers. Okay. Then, sorry, I need to look up and to the left above where price is currently at to find that sell zone. So I'm going to go over, and I might have to go over a little bit here. But you see where price is at right now, right? Follow it up and to the left, and you will see in this area is where we're going to find the resistance. Here's your first one, inside and down. That is slightly, ever so slightly above where price is at right now. That's why I would be waiting for a pullback here before buying, because I recognize it's coming into immediate resistance. Okay. I'm not going to be a buyer up here when there is this sell zone right above. All right. And then above there, you have these are all technically inside the body of this candle. You get a down move right there. I can make that the next zone above. All right. But this is a trade I like for longer out. That's why I'm talking about the weekly chart. But I need a pullback, even a slight pullback to the weekly cloud. But I need that pullback before I would be comfortable going long. Because if I took the trade where price is at right here at $23, my stop would have to be down here below 17. That's $6 of risk, and my immediate resistance is $1.50 away. That's just not a good risk to reward by anyone's standards. So I need a pullback. Okay. All right. And next up is going to be Williams. This is another energy play. Obviously, I need to adjust that, right? Made new all-time high. This is in a beautiful TTM squeeze. On the weekly, this would be another longer term type of trade, but I like it on a pullback. You got an inside and up right here at 58.23. So I would like to start a position somewhere around 57, $58, add to it in this zone, then play it back up to 62, 65.55. If we make a new all-time high, I would run extension targets there. All right. Dividend, okay, we still have a month, so we're good. All right, XEL, and then I am done, and I'm going to get to your questions and your chart request. XEL, a golden profit area pullback would be my buy zone there. And then I would be playing it back up to 83 and 86.81. Okay. Yep. All right. All right. So I went through all those charts. I'm not going to be in a trade in every one of those names. I will narrow this down. I take this list, I narrow it down to my top 6 to 8, and then I have my alert set and I'm ready to trade the levels on my chart, take my entries. If I'm scaling in on that ad, I do wait for confirmation in my buy zones, meaning higher lows. Since all of these are bullish plays, I would be waiting for higher lows and a break above. If I'm trading on a daily chart, I'm watching 1 hour candles for a higher low. If I'm trading on a 4 hour chart, I'm watching 30-minute candles for a higher low. And if I'm trading on a weekly chart, I'm watching 4 hour candles for a higher low. All right. All right. Let me get to your questions, your chart requests. Go ahead and put them in the chat now. What do you think of the gamma platforms? Are you talking about Spot Gamma, Claudia? Spot Gamma? Yeah. I don't use them in my trading. I know Henry here at Simpler Trading uses them quite a bit. JC looks at Spot Gamma and all of that. I don't know who else does, but I know those two specifically, and they really like it. I just personally, I am more of a price action trader. So, spot gamma, oftentimes, your put wall and your call wall are going to be at buy zones and sell zones. Your high open interest strikes on whatever name it is are going to be your call wall and your put wall. So I say, all that to say that it works, and Henry and JC really like trading off of Spot Gamma. I just don't use it because my focus is on price action more than the gamma strikes. Okay. And then you asked if I would take a look at Joby. Yep, we can look at Joby. You bet. Thanks for the request. All right, from a daily, or sorry, is this daily? Weekly time frame perspective. Um, Boy, that was a nice looking um buy right there. Wow. Looks like I probably charted this out for someone before. Let me clear this real quick. From a weekly time frame perspective, I would still run that same fib. Look, you know, well, I assume, Claudia, that I like Golden Profit plays buying the dip there. You have an inside and up down here near this 887 and this upper yearly edge. So you have pulled back into the golden profit area once and twice. All right. And we could be coming back there again. As far as targets go to the upside, let me just clean this up just a tad here. All right. As far as targets go to the upside, you had an inside and down right here. You can see we've came back up and we've tested that several many times. I see an upper monthly edge right here, and then of course this swing high up here at 2095. So these would be my targets back to the upside, playing from this golden profit area there on Joby. And if price wants to fall, then this is the area that I would look at. If that golden profit area does not hold. Okay, that would be my next buy zone on Joby. Claudia, when you go to Koifin every week, would you choose the sectors to be in because the last 5 days move and month to date? So when I go to koifin.com, I start just like I do on regular charts, and I do a top down approach. So first I look at right now I look at year to date, and then I'm going to look at a 3 month look back, quarter to date, a month to date, a 1 month look back, and I'm noting the rotation and what, is, and I also look at a 5 day, but I don't really trade off of the 5 day look back. I'm just looking for that rotation. So I start from year to date and work it all the way back to 5 days. Deepak, can we go through SPX setup, preferably from scratch for scalp swing trade for next week? Oh man, Deepak, I think I've already did my SPX chart, but let me go look. Let's see. Let's see if it's old. All right, we can do it. I'm gonna be looking at the 2 hour. I mean, I don't even have to zoom in to see that this is the first sell zone. Inside, gap down. Okay. And Deepak, this is going to be just like a ES chart, right? Deepak? I really, really don't do anything different because it's SPX, except, of course, when I'm day trading it, I have to manually put a PMZ on it, but that's the only difference. Okay. Notice we came up and we did this, but notice right here. So really, I could expand that zone all the way up to there. But then look further left and you see the inside and down right there and right there. So, I mean, this is just a big old whopping area of cell zones. That's the best way I can look at it. So I'm just going to make this red zone here. Oh gosh, I'm glad I looked at that. I'm going to make this red zone right here. It's going to be very wide, and that's simply because we created cell zones over and over on this chart. So I need to extend this side up to the all-time high, 6920.34. All right. You see why, right, Deepak? Okay. All right. Then look down and left and you see it right here. Yep. You see it right there. Boom and boom. There's your buy zone, right? That's the immediate buy zone. Okay. Now, it's been tested, so I want a lower zone below it in case it breaks, so I'm not scrambling while trading, right? So I need to look down and left, and you see this inside and up, but look, it goes all the way here. So what else could I use? If you said lower monthly edge, you win. You win the prize. Okay. Whoops. Come on now. So this is my lower zone if that one above were to break. Yay, good job, Deepak. You got it. All right. So that's my lower zone if that tested one at 66.59 and a quarter breaks. Okay. Then let's run some fibs from this low to this high. And anything I can use this for? Yep, of course. I want that golden fib right there. And you know I like to make it gold, right? Want that there. Um Boy, price stopped right at that 50, but I have a monthly edge mid right there, so that would be the same, right? Now let's run some fibs from the opposite direction to get upside targets above where price is at, right? There and there, and I'm gonna make this one gold. That way I know it's a 618. Okay. Yeah, that's lined up with tomorrow's upper weekly. I mean, I could put a line right there, but that seems a little ridiculous. And yeah, that gives me some areas right there and just tells me, golly, we could just be very choppy. I'm going to put a line right at the lower weekly edge. You know, I usually like to label these. So I would label it. And same way here, this is upper weekly edge, right? If I'm wanting to trade ES is upper and lower, wouldn't I? That would make sense to trade SPX upper and lower. Oh, no, no, no. All right. All right. Anything else I need to mark in here? Well, I'm pretty sure I can take those off because that was probably from day trading Friday. Um, no, not until price opens on Monday. Then I'll draw some fibs for scalp type trades. So that would be my blueprint, Deepak. And I mean, there's nothing to really draw. It's just like the yes, it's going to be the same sort of plan. Really, the plan is focus on these edges and being buyers lower on the curve and sellers above the curve. Okay? You know what I mean? There's just I'm just anticipating the edges being in play yet again. The upper weekly and monthly and the lower weekly and monthly. So that's what I'm anticipating as far as swing trading SPX goes, Deepak. All right. Claudia says, going back to Joby, if we go to a 4 hour to look for a higher low, do you think we have it? Let's look. JOBY. So that was on a weekly, right? So we haven't came into my zone yet, Claudia. We did last week before, the week we just finished, but we haven't came in here. So I would need to see price come into this zone. What I do is I put an alert at my zone, and then I go to those 4 hour candles if I'm trading off of a weekly chart. So you have, here's your low on the 4 hour. This is a higher low. All right. But I want to see momentum above the body of that candle. But again, we're not at my zone, so I wouldn't be doing this here. Does that make sense? Deepak, maybe at the beginning of next year, towards the first or second quarter, Deepak. Awesome. All right, guys. Looks like I got all the questions answered and the chart requests and all of that. And I have a game plan as far as the things I'm going to be watching for next week. It's quite the variety in there. I got some tech, I got some communications, I have some healthcare. I'm already in BAC, so I got financials covered. Golly, we have a little something of everything in here. And I will narrow this down, hopefully get some trades, and let's have an awesome week next week. Thank you so much for joining me for the live session. I will see you again next Saturday for the live session. If you haven't already, do me a favor, hit the like button. Make sure you're subscribed to the channel. I post videos every single week. Sometimes I post short videos, sometimes long videos, but make sure you're subscribed, and I will see you in the next video.